on, you guys? It's BGFX. Welcome back to the channel. I'm coming at y'all with a brand new video, and in today's video we're going to be going through some trades that I actually took over the last couple of weeks in the market. So in this video we're going to go purely through GBPJPY trade setups as usual. Over the last couple of weeks I would say that my trading did slow down a little bit, just because obviously the holidays, we just had Christmas pass, we had New Year's pass as well. So I hope you guys did all enjoy your holidays. I hope you had a great Christmas, a great New Year's. Hope you enjoyed the time with your family. Any time away from the markets, that is usually well deserved, man. So I hope y'all enjoyed y'all time. Like I said, let's go ahead and get into the video. We are going to go into the Telegram. We're going to look at the VIP. We're going to look at the signal. We're going to go to the Instagram, look at the before and after of the charts. We're also going to take a look at the MyFX book. So we're gonna do everything with 100% transparency as usual, man. So I hope y'all enjoyed this video. As usual, if you do get some value from it, all you gotta do, hit the like button, hit the subscribe button, drop a comment, any feedback you have below, and I'm gonna try to respond to every comment on this video, man. So let's go ahead and get into it. So to go to the Telegram really quick, we're gonna go to the first trade setup, which is a setup that was taken on January 4th, which was actually the first London session of this week, right? So the night before last, we ended up taking this trade setup, and you can see I'm selling GBPJPY, entry at 141.035, stop loss at 141.066, which was literally only a 3 pip stop loss, and the take profit was 14 pips. So this was a fairly aggressive entry, but it was with the overall lower time frame sentiment. Kind of following through with some of this bearish movement. I want to see somewhat of a continuation, and we were looking at micro market structure. So to go ahead and take a look at our entry, right, let's go ahead and rewind the charts really quick, and this is what everything looked like when I sent my markup. So if we come back over here to the Telegram, we can scroll down. This is the markup I sent. You can see we have our entry, take profit, stop loss up here, and all I wanted to see at this point was price push up, and once price came up to here, I was gonna sell off. Now, one quick thing you'll notice in the market, especially if you're trading 1 minute time frame, is that if you have a huge bullish candle, right? Huge bullish candle. Sometimes that bullish candle will scare you away from your entry. Something I realized is to kind of push that to the side and understand that if I was using a limit order, it would be no different. So in real time, if I see a huge candle coming up, and if my overall setup is still aligned when I look to the left, I'll take the trade anyway. So we had a huge, like I said, bullish candle come up to here, and I sold right there on market execution. And then if we come down, literally only 1 minute later, risk-free melting, and then you can see that the entry was literally just beautiful on the pip. And this was a very quick setup that literally played out and hit take profit for a 1 to 4, and I believe a little bit less than 5 minutes, and we'll come back. Okay, so look at this setup. If we go to the sessions, you can see that overall for Asia, right? Asia opened up. We had a very strong push to the upside, and we made this high. So just to point something out really quick, I was actually looking to sell GJ right here, and it literally missed my entry by 0.01 pips, give or take. And the entry was going to be at 141.283, and you can see it literally barely missed my entry, and I was looking at short right there, which is something that happens, man. You know, trying to move on to the next setup as quick as you could, you know. So kind of moved on from that. We had price come back down. You can see what we created, the Asia session range. Now this range here created a very clean set of equal highs right around this area. So in order for me to trade with the overall sentiment, right, I didn't want to just take fibs down from here and then sell on like a retracement right here. Okay, I wanted the market to kind of play some type of move against these equal highs in order for me to short backward the direction of the trend. So instead of me shorting once price is coming down, I want to see the market take out those equal highs of Asia, you know, pick up that liquidity, and then potentially look for the entry. So we've seen that the market rejected, right, after creating these, after taking out the equal highs, and it tested this area here of supply, right? Tested this area, right? See these up candles, see this consolidation. I will box off this entire area here, and we can see that the market showed reaction, broke structure. So from there, if we come back to the Telegram really quick, you can see that my entry was at 141.035. Okay, 141.035, and my stop loss was at 141.066, 141.066, right? A little bit lower than the previous high market structure. And we'll go ahead and pull the sessions indicator off. And my take profit was at 140.891. So for me, this was pretty much a scout. I was not really looking to hold this trade for too long, although you could have, depending on your personality, depending on your trading approach. So you can see that this was overall we had going on, and we literally had price push up to entry, and within seconds we literally melted off right away. So the most crucial thing here is let the markets do their thing. Obviously it happened very quickly, but still managed to get the entry and literally trade hit take profits within 5 minutes, which was beautiful. And this was a 1 to 4.65 risk to reward within 5 minutes, which was very good. And this was the first trade to start the year, which was great to set the tone this way, right? So just to give one more quick recap before I move on to the next trade: market rated equal highs of Asia, tested this area of supply, broke structure, came in for the pullback, and this was trading with the overall sentiment, right? I did have a feeling that this little crossover here was going to bring us back to the downside. So understand that the market, for the market to reverse, it does not always need to create a perfect head and shoulders, or it doesn't have to do anything like that, right? The markets are very algorithmic. You'll see certain things happen sometimes, things very simple that literally make the market reverse, and then other times you'll have things like this happen. Take out the high, break, create the flow, take out those highs, and then reverse. And you'll notice that the markets do everything for a reason, right? So we picked up that liquidity, broke the structure, pulled back, and then from there I could have held. Like I said, I could have, but I just decided to get out at a 1 to 4. So that is pretty much it for that trade. If you look at the higher time frame, you can see it was right after we took out that structural high at 141.213. And overall, very clean trade setup, right? So to go back here, you can see risk free if you got in, melting, looks something like that. This was actually my personal entry, if you guys want to see. And then from there, targets hit at 1 to 4.65, and this was after. So this is pretty much the last trade I've taken. These are the last 4 trades right here through each tab that I've taken. They were all wins, but like I said, stayed very selective about my entries. Didn't really take too many trades, just focusing on quality over everything, right? So if we go ahead and scroll up, we're going to go into the next trade, which is taken on December 29th, right? December 29th. So we're going to come back here to the next chart, and this was the trade. So let's bring the charts back really quick to here, and we're going to go ahead and break down the overall reasoning to why I wanted to go ahead and enter this, right? So if we go ahead and we look at the overall structure, go to the sessions, you can see that once again we had another Asia session range, right? Price ended up ranging for what looks like a few hours, and then we break out to the downside and we come back up. So if we go ahead and we get the high low, day box pretty much plots the high of the day after it happens, of course, but you can see that the high of the day during this time was 140.165. So my bias is that GJ, this was pretty much going to be the highest point before we get a decent push to the downside. So from here, what I did was I marked off this last point of supply from showing reaction of the high of the day, right? High of the day right here, potential supply zone right here. Price comes up, tests the supply. Now instead of me going ahead and entering right away, I wanted to see my structure form. Now me personally, I like to go with very aggressive stop losses. I like to enter with very low drawdown. So I didn't really feel comfortable selling here, right? And if you did sell here and you went a little bit in the profits with like a 3 pip stop loss, chances are you would have went risk free. Price would have came up, stopped you out at break even. So from here, I let the markets do its thing, and what I did was I actually took this arrow here, bring that out like that. Okay, and then from there, I took my entry, just double check really quick. Entry was at 140.071. Stop loss was at 140.112, and then take profit was, let's see, 139.806. Perfect. Okay, and just one more thing I want to point out really quick. If we go back to the markup, you could see that my final targets were 139.806, but at the same time I did have this line drawn out, which was another potential area of value that I wanted to see price show some type of reaction to, and was another level where I want to see a potential, or where I wanted to take some potential profits off the table. So just to come back here, 139.883, 139.883, just like that. Okay, perfect. And then like I said, we have our range. We took liquidity below, we came up, potential high of the day, last point of supply from the high of the day. And then the goal here once again was just to catch reaction. I didn't need to catch the entire trend to the downside. I just wanted to go risk free, have price hit my targets, in and out, okay, and then come back the next day and do the same thing over again. So we press play, we have decent reaction, another bearish candle. From this point, I did make my trade risk free. So if we come back to the Telegram, selling GJ, little bit of reaction right here, risk free, melting. This is my entry on my high risk account. I'm currently having 2 accounts I'm trading, by the way. I have a high risk account which consists of me risking around 5 to 10% per trade, more focused around making quicker money, not necessarily changing my trading habits, but just more of me changing the risk parameters so I can kind of get a different return. And then I also have a longer term account, right, which is a much larger account, but it's more focused around longer term growth, right? 1 and 2% risk per trade setup, and that's kind of where I stay very disciplined with my risk. My aggressive account is just so I can kind of get that all out my system, and I can get the 5 to 10% risk per trade, okay? So I can follow the 1 to 2% on my main. But looking at this, you can see that we take out the lows right here, fairly nice bearish candle. We have this indecision candle here, come from both directions, and then from there we hit that zone right here, go right through it. Then at this point, I think this was the lowest point of this move. Now if we come back down, or if we come back to VIP, you can see that we had a decent reaction, and I said hit 3 times our risk, make sure the trade is risk free, take profits depending on where you feel comfortable. I took all profits on my high risk account. I'm leaving the position open on my main account, right, 4 times risk, and then I did go ahead and take profits on my main account. So at this point, once price kind of messed around here around 4 times our risk, give or take, I pretty much already hopped out the markets, right? I seen how we potentially showed a little bit of reaction here, and I jumped out pretty much at that point, okay? And just to give one more quick recap of this, Asia session range, take out the lows, make the high of the day, last point of supply from there. One more quick breakthrough of this, Asia session range, take out the high, meet supply from here, break structure, pull back, sell, right? Entry point, very, very tight. Stop loss, entry point here, very tight stop loss. Okay, next trade we're going to be going through is a little bit different. This trade here actually only took around 20 minutes to play out, I believe, and this trade here actually also took 20 minutes to play out, which just goes to show crucial to train yourself to understand that every trade is going to be different for the most part in terms of what to expect, because at this point 20 minutes we were only running at a 1-to-1. So I took my entry here. If we scroll up to this trade was a 138.686 was the entry. Then stop loss was around 6 pips, and then take profit from me was around a 1 to 1.2. I ended up securing this trade very, very early, and you can see that within 20 minutes this happened. So we got out around a 1-to-1 within 20 minutes, and at this point 20 minutes pretty much already had us around a 1-to-4. Now the reason I decided to close early with this is because this was holiday week, right? This was a little bit before Christmas. You said this was December 22nd, literally 3 days before Christmas. So I really didn't want to expose my capital too much into the markets. Typically around the holidays you will see the market provide less opportunities, not necessarily slow down, because the markets will still move around the holidays. Sometimes we'll have more volatility actually depending on the circumstances, but it'll tend to have less liquidity, right? Because a lot of retail traders tend to sit out during the end for the holidays, and also big players, right? Central banks are usually less active as well. You got a lot of things going on with banks kind of stepping away for vacation, right? Christmas, holidays. Same thing with the new year, right? So now that that's all over, we can get back into things fresh again. But at this point, holiday week, I only wanted to get in and out, right? Market tends to move with less purpose. It'll still move with it'll still have volatility, but you'll see a lot of those consolidations and random spikes in certain directions when there's less liquidity in the markets. Okay, so that's what we have going on here. And then last but not least, this is another trade that I ended up taking. This trade ran about 40 pips, and my entry was somewhere in this area. We'll go back to the VIP really quick. We'll scroll up, and we also had this opportunity here, right? But it did not end up triggering entry, and at that point pretty much just left the trade for what it was. So here we have our GJ trade running 40 plus pips. This was the entry. Ended up entering right here. Bullish candle came up, consolidated, fell right off. Okay, and this was a 10 pip risk for 110 pip potential reward. 139.985 was the entry. 139.985. Stop loss, like I said, 10 pips. And then final targets, you could have pretty much taken profits wherever you wanted to, but me personally, I really didn't want to hold this, like I said, for the long term, just because of the overall style of the trade, right? You can go ahead and adjust your parameters as market structure does its thing, but you can see from this point, we made equal highs around this area. My bias is that we were going to neglect to make equal highs. So since we do make the equal highs, it was a good chance we're going to come back up and then maybe fall off from there. So that's the overall goal and the overall outlook of why I didn't want to hold that trade for that long. But really quick, we're going to go to the Instagram. Like I said, man, I always try to do things with 100% transparency for you guys. So yeah, to go ahead and look at the entries I just went through. This was before, this was a little bit after. This is once price dropped off, took out those equal lows. This was the scalp right here. This is before, this is after. These are the signals sent, and this is the MyFX book. Okay, it was 137% during the time of this, and you can see every trade day by day. And drawdown was at 35% because it's ended up doubling down. Ended up doubling down a little more than I should have, but like I said, high risk account. So next trade, GJ sells. This is before, this is after. This is the entry on my main account. This was the entry on my high risk account. This is the signal. This is after, 4 times risk, taking profits on my main account. This is the MyFX book, up 146%. Next is going to be GJ sells again that we took this week. And this was before, this was after. Very clean entry, clean exit because we pulled back a little bit and then we ended up falling off. But as a scalp, very clean exit. And then that was at London Open. We came up and dropped off again. This is the signal. This is after hit take profit. This is the MyFX book, screenshotted from my phone, and 148%. And then you could just see trades. You know, we're on a solid win streak right now for GJ, so not too bad. But all about sticking to the plan, of course. And then we have GJ shorts right here, before, after. And then if we come back, right, when I started the MyFX book, it was beginning of December, right? I actually ended up creating the account, the high risk account, at the end of November. I believe November 27th. I could be wrong though, but we'll see. So this was the trade. I also covered a video on this trade. This one ended up running about 14 times our risk. And this was the entry, this is the signal, this is the profits, and this is the trade. So this is the first trade I took on the high risk account. And November 26th is when I opened it, and December 1st is when I took my first trade. And this was a 32%, and I only risked like 3% for this trade, which was could have been more, but I decided I was just gonna do high risk a little bit after I did this trade setup. So to come back to here really quick, and I know, let's go to this one. Just to point out, you can see November 26th exactly when I opened the account, and it's full transparency, equity curve, everything. So that is pretty much it for this trade, guys. I hope y'all did enjoy this video. Hope y'all enjoyed it. Hope y'all got some value from it. Like I said, very simple trade here, taking liquidity from the equal highs around Asia, dropping off. Same thing here, high of the day, last point of supply from the high of the day. Simple scalp, and then another one which ended up creating equal highs. My stops did have breathing room on this trade. And yeah, so that's pretty much it, man. I hope y'all enjoyed this video. Hope y'all did get some value from it. You know what, let's do one more thing. Let me see if I can just take y'all through a free concept, because I feel like for this video I didn't talk too much about how to get better entries. I just showed y'all mine. Okay, so let's go ahead and go through this really quick. Okay, let's go ahead and replay the charts, and we're gonna come back to here, and I'm gonna show you guys how I would have perceived the markets here. Okay, so to look at this, first thing I'll do, checking out the session. Okay, transitioning into London. Once again, we created highs. Double top here on the 1 minute, micro market structure. Double top on the 1 minute. Kind of look at all this, and keep in mind it's coming right off the top of my head. But to look at this, we have Asia range. We retested the Asia range, keep this in mind. We retested this Asia range, so most would assume that the market did pick up buy orders, right? Market had a very bullish tendency here, pushed up, took out these equal highs, right? Took out these equal highs. So you can say the market was fairly bullish. Now from here, the market picked up buy orders around Asia. So if we create equal highs here, and for any reason the market wants to remain bullish, okay, and it wants to seek this liquidity later, what it did was it broke that low and it mitigated buy orders, right? Anyone looking along here, any buy stops, anyone who bought this retest, the market took out those lows of the Asia retest. Now from there, excuse me, from there, if the market gave me a reason to long, I would go long off the low. Now the concept behind it is, you probably heard the saying, your best opportunities come up when everyone else is fearful, and when everyone else is very greedy, that's when you become fearful. Okay, vice versa. You know, same thing with Bitcoin. Okay, not to get off topic, I'm gonna get back into this in a second, but same thing with Bitcoin. A lot of people think because Bitcoin is at an all-time high, everyone is greedy and everyone is buying. Truth is, most people are fearful because it's at a place it's never been. Okay, it's at a place it's never been. So if you would have bought Bitcoin when it started breaking highs, and let's say when it was at 26,000, you would be up, your portfolio will be up, because most people are not buying because they're assuming a pullback, when really the all-time highs, sometimes what goes high tends to go higher depending on the circumstances, once again. So but to look at what we have here, the market took out those lows, and from that point I would like to essentially long off of it, and you can see that the market pretty much rejected here and gave you a solid W, formation. Now for me personally, you can see that market took lows of the Asia range, took lows of this Asia range, and it pulled back. Now if you were a Fibonacci trader, you could have traded this, you could have maybe entered on a 618. I haven't really entered on a 618 in a little minute, but, or at least on a 1 minute time frame. But I would essentially want to see what the market did or what it created. So I want to enter at this zone if the market was to retrace to it, and I would take fibs from here to here, and I can see that the 786 is in perfect confluence. I would probably place an order right in the middle like this. Stop loss would be right below here. Take profit will be, like I said, if the market remains bullish, it's going to take out those equal highs eventually. But your goal here is, this is going to be the last point of demand before price goes back up. So if the market does come back down and it does something like this, it's no longer valid, and it will most likely continue down, or it won't be in your favor to hold a buy position at 140.645. You always want to make sure you're in the markets at the right price. Okay, in this case, you buying here at the last point of demand, that would be the essentially one of the best prices if you wanted to go long, you wanted to target equal highs. Okay, now next best price would have been here, most likely. Okay, I think my chart's a little crooked right now, but next best price would have been here. Me personally, I don't want to have a 1 to 2.4. I'd much rather have a 1 to 16, take the loss, and guess what? I would just drop a second position here. But once again, looking at the structure, looking at the overall change, it would make most sense the market would do something like this and then continue to the upside. So there's a lot of factors, but once you train your eyes, once you understand the characteristics of the pair you trade, it'll make all the difference. Okay, and then boom, we're triggered. From there, we're triggered. I would make it risk-free. Well, yeah, back to what I was saying. I'd make it risk-free somewhere around here once we break these structural highs. And then from there, trade takes out those equal highs, and it will look something like this. And then in the meantime, you can also keep an eye on just what structure looks like, but you can see there was overall a structural shift going on here on the 1 minute. So Asia range, break and retest, picks up buy orders. London opens, create these equal highs, mitigates or takes out buyers, gives you structure. You could have entered here, right? Depending, I personally wouldn't have entered here. You would have came back last point of demand before we seek liquidity above those highs. Okay, so that was just off the top of my head, just to provide a little bit of value for you guys. And we're gonna see if I can find one more example. Very similar opportunity here. If we look at this structure, market consistently making lower lows, finally comes up to here and reverses. We scroll back up, a little bit smaller, right? Because understand the fractal nature of the markets. Very similar rotation into going long. And then if we look left, last point of demand. From there, find the next area of demand, and you'd probably just want to long it right here. But this was a very fast wick, so there's a chance you could have missed your entry. I would have probably took my entry here. Stop loss would have been, since we had a wick here, I probably would have just placed it below this wick. Okay, and then take profit once again. Will probably look something like this. Right there, for around 40 pips exactly. I'd round it off. And it would look something like that. And then in the meantime, aside from me just staying in the longs, I probably wouldn't hold it that long, to be honest. I probably would have took profits, give or take, when we tested this high. Right, when the candle started rejecting, I might have just closed it there as a scalp. But just to get off topic and say that we want to sell at the same time, I'll probably short this. If I wanted confluence, I would pull a fib out. You can either enter on a 786 or put a little bit higher. Let's just say you want to enter on a 786. Stop loss, I would not go with equal highs. I put my stop loss right above these wicks. Equal lows here. Take out the liquidity before going with the entire upside move. Liquidity taken. Buys are then finished. Right, so very simple. And then if we come back, and yeah, so that's pretty much it for this video, guys. I just want to go through a couple more concepts, but as you can see, markets gave a very similar thing going on here. Okay, understanding, and this isn't going to happen every time, but it's just a little example that the markets provided similar opportunity in the same trend. So market consistently made lower lows, came up to the highs. Did something like this, right? And it met that strong point of demand before continuing up. Okay, and then it came, broke out, pulled back, continued up. What do we do next? Broke out, pulled back, and we're at least wicking. I don't know if we're gonna continue up, but yeah, and then still made new highs. And then maybe depending on the higher time frame, you can sell off this high, depending on what the lower time frame will show you, right? And then even looking at this structure here, if you take a quick mental note of the way this looks, you can then come back down to the 1 minute and look at how similar this shows you here. Okay, if you want to scalp shorts. Very similar opportunity to coming up to the 30-minute and seeing the same exact structure play out, right? Fractal nature of the markets. So that's it for this video, man. Hope y'all enjoyed something new. It's been your boy BGFX. Appreciate y'all so much for watching. If you did enjoy, if you got some value from it, make sure to hit the like button below. It's been your boy BGFX. I'll catch y'all later. I'm out. Salute.